All right, hello everybody. I'm Mark. I'm the stock market jobber. I want to talk to you a little bit about Facebook. But first, let me just go over my background a little bit. I'm a former institutional trader. I was head of trading at three big money managers that all manage well in excess of $1 billion. I started in the industry trading directly for Mario Gabelli, the great money manager. I spent some time trading for Steve Cohen, the great trader. I was a market maker, oversaw all kinds of hedge fund strategies. So when it comes to trading, there's really not too much that I don't know. Um, and I want to take a look at Facebook because I think there's a good chance that we get a reversal here, right? Everyone's talking about, oh, they're cutting their expenses and so forth and so on. Well, people are missing the fact that they were well short of their earnings estimates. They reported 167 and the estimates were 224. So I don't think that the headline numbers are as good as they seem, and there's a chance that the stock could come right back down. Now, I just want to show you something here. Reading charts is about understanding market psychology. Sorry about that. Let me just shut my ringer off here. All right, so reading charts is about understanding market psychology. Now, here we have a level that was support turning into resistance. Here we have a level that was support turning into resistance. This happens because of buyer's remorse. Investors buy and then the price goes lower and they decide they want to get out, but they don't want to lose any money, so they place their sell orders at the same level they bought at. So remorseful buyers placing sell orders at their buy price could turn a support level into resistance. There's another dynamic that happens, and that is levels that were resistance can become support. And that happens because of seller's remorse. People sell and the shares go higher and they regret selling, so they tell themselves they're going to buy their shares back, but they are only going to do it if they can get it for the same price that they sold at. So we can see here there was resistance here, and that's why it is support. This was the low trades today, right around this 183 level. There were people who sold that saw it go higher, and they tell themselves, darn, I shouldn't have sold. I'm going to buy my shares back. Now, you've probably heard the expression that gaps refill. And if this support breaks, meaning if these investors finish their buy orders, well, there's a good chance we fall right back down to around 160. And why is that? Well, we gapped up. We closed yesterday here. We opened today here. Now, because the stock never traded at these levels, there can't be people that were selling that are trying to buy their shares back. It just never traded there. So if it didn't trade, you can't have anyone who sold who's going to buy their shares back. So if this support does break, there could be a lack of buy interest in here, right? And we could close or we could refill this gap pretty quickly. So just think about it. These numbers were really not as good as people seem to think. And we're sitting on a little bit of a support level and we're right above a gap. So if we get a reversal, there's a good chance that we get right back down to around 160. And if you're an options trader, I think you should have uh, some puts on your radar screen, but I wouldn't. I would wait until we get below 183, maybe around 180, to tell us that this support is broken. And support breaking means that the buyers who created the support are out of the way. And if ever you take demand out of a market, well, there's a chance that it's going to go lower. The supply side will have to push it down. It's just basic economics 101. So that's all I really have to say. Make sure you please check back tomorrow. We got a lot of other important earnings coming out after the close, and we'll be covering them tomorrow. All right. Thanks, everybody. Have a good day.